120% gains in 7 days, trading near its all-time high and backed by institutional names like VanEck Ventures and Polychain Capital. Most of the market hasn't heard of it yet. The token is called UP, and the project is Superform, a protocol positioning itself as an on-chain neobank. Superform operates as an omnichain yield marketplace. It is designed to scan different blockchain networks to find the highest available returns for deposited assets. For the user, the experience is consolidated into a single dashboard to save, swap, and earn, all while maintaining full custody of their crypto. The question is whether this architecture justifies the recent breakout, or if the current momentum is a temporary rally waiting to reverse. To earn yield in DeFi today, you often have to navigate multiple bridges, connect to various protocols across different chains, and manage the specific security risks of each one. It is a fragmented and manual process. Superform abstracts that complexity. A single interface routes assets to these yields automatically, removing the need to manually bridge networks. This functions like a savings account that automatically moves your capital to whichever branch offers the highest interest rate. By centralizing these functions into one hub, the protocol reduces the technical barriers and manual errors that typically define cross-chain interactions. While the utility is clear, the token structure presents a significant risk flag for investors. The supply disparity is wide. Out of a maximum supply of 1 billion tokens, only 190 million are currently in circulation. That is only 19%. This gap means that while the market cap is roughly $50 million, the fully diluted valuation, the value if all tokens were on the market, is approximately $260 million. With 81% of the supply still locked, the market faces a recurring schedule of new tokens entering circulation, which creates persistent downward pressure on the price as those unlocks occur. This dilution risk is currently unmitigated, as there is no confirmed mechanism to burn tokens or reduce the total supply over time. On one side of the ledger, the technology is delivering a streamlined user experience. On the other, the tokenomics suggest a difficult path for early retail holders to maintain their value against future inflation. Superform's security stance is built on non-upgradable, non-custodial smart contracts. There are no admin keys and no backdoors, meaning the developers cannot unilaterally change the protocol's rules. This focus on security has helped build massive community momentum, further accelerated by the acquisition of the Piggy brand and its migration to the UP ecosystem. In terms of competition, Pendle Finance is often the main comparison. But where Pendle focuses on the complex tokenization of yield, Superform targets yield aggregation, making it more accessible to a general audience. This focus on ease of use and security gives the protocol a broader potential user base than the more technical platforms designed strictly for institutional yield trading. For those looking to trade the token, UP is currently listed on centralized exchanges, including Coinbase, HTX, and MEXC. For on-chain users, the primary liquidity is found on the Aerodrome decentralized exchange on the Base network. Price history shows a massive move. Since launching in February 2026 at 5 cents, the token rallied over 400% to around 26 cents. It's now testing its all-time high of 27 cents, the immediate technical level buyers must clear. A clean break and hold above 30 cents would signal a continuation of the macro trend, rather than a rejection at these highs. To summarize, the bullish case is built on strong institutional backing, a clear security architecture, and a product that solves a specific friction in DeFi. The bearish case centers on the low circulating supply and a valuation that appears high relative to the amount of tokens yet to be released. While the protocol's architecture addresses a technical bottleneck in the market, the performance of the UP token remains heavily tethered to a demanding unlock schedule that requires careful monitoring. This analysis is for educational purposes and is not financial advice. Always do your own research. If you found this breakdown useful, like and subscribe, and leave your price target in